Welcome back to the channel. Like always, my name's Jose Najarro and I am a self-taught investor looking for investment opportunities for my long-term portfolio. I am very excited about today's episode. We are going to take a look at 3 stocks that I'm keeping my eyes on right now. Before we start, let's make sure to smash that like button. It helps so much with the YouTube algorithm. And on the description in the pinned comment, you should also see a link to my Discord channel. It's free to anybody that wants to join. I post every time I buy and sell there. And also you should see a link down there for Webull. If you sign up using that link, we both could get a free stock if you deposit $100. So for each stock today, we're going to do a quick overview of what they do. We're going to take a look at some technical analysis and take a look at some of their fundamental numbers as well. Also, one thing I forgot to mention, today we are taking a look at 3 stocks, like I said, and we're also going to take a look at a 4th stock that was recommended by a YouTube comment. So if you guys want me to take a look at a stock, feel free to post on the comments, and maybe on the next episode, I might do a quick overview on it. All right, so the first company we are going to take a look at today is Flir. They have products that have to do with thermal imaging, thermal reading, and they're used in a huge variety of markets from military, border control, engineering development, security. They're used on drones, cars, tanks, helicopters for the police department, night vision. They're also used, for example, documentary or when people use them to record videos in nature or for science purposes. So there's a huge variety of platforms and applications that we use Flir for. Right now, obviously, with the whole COVID-19, thermal imaging and thermal reading products are doing amazing, and many believe that Flir is one of them that will continue to improve and get more sales as this whole situation continues to develop. So first, let's take a quick look at the overview. So right now, Flir is sitting at about $41.95. Year to date, it is down 21% from the beginning of the year, and it is down 28% from its all-time high of the year. Right now, Flir has a market cap of $5.38 billion. Very small company compared to those that we see out there. So we're also going to take a look at charts. 2 things we're looking at the charts. First, is it overextended? The first thing I'm seeing is we've seen a nice price jump up in Flir. I know ARK Investing is purchasing a lot of Flir lately. That could be a reason. So when we take a look at the short-term moving averages, it is a bit overextended. The second thing I want to take a look at is their volume within the stock price it's at right now. So here I'm looking at my volume profile, my favorite technical tool to use. It tells me at what stock price are we seeing the most volume. And we can see we have a huge range of volume between here, this $34, which was the nice support levels, and we're seeing this huge resistance level at around $46. So we can see around this portion there is still a lot of volume. So that tells me that there's a lot of people that bought in and sold in during the stock. So this is going to provide a nice amount of support and resistance around these levels. Next, I want to take a look at future growth for Flir. Flir right now is only expected to grow 3.4% on average annually for the next 3 to 5 years. This is I wouldn't consider this a growth stock at all. And this is pretty insane that this is the type of growth is seen, especially right now with all the thermal imaging that is needed due to the overall pandemic that's happening. One would expect the sales to increase right now. But one thing we are seeing that Flir is positive in earnings, and they're also positive in cash flow from operations. They're making money right now. Next, let's take a look at their financial balance sheet. They have about $320 million of cash, and they have about $783 million of total debt. So it's almost, they almost have 2 times more debt than they do cash. And so one might think that's a bad balance sheet, but remember, they do have a strong earnings and they have a strong history of cash flow from operations being positive. So that gives them a leeway to not have such a strong balance sheet. So to me, in general, when looking at the overall company, it does have a decent balance sheet based on its other fundamentals. Next, I wanted to take a look at its price to sales valuation. Price to sales right now is 2.91, and we can see compared to its previous months, it is actually one of the lowest levels right now. So it is cheaper than it was in March. It is cheaper than it is in September based on those trailing 12-month sales. So things aren't looking too bad for Flir. Like we saw a lot of great things for Flir that earnings positive, cash flow from operations positive, decent balance sheet, and it's actually in the market that I see can be useful even after COVID situation is done. The overall major risk I see with Flir right now is that low growth, but besides that, everything else looks fine. A little bit overstretched from its moving averages right now, but it is in a position where there's a lot of volume around the current stock prices. All right, the second stock we're going to take a look at is Nintendo. But before we do that, don't forget to check out my second channel, Jose Najarro Entrepreneur, where I post videos outside of the stock market there. I have learned multiple ways to make money outside of the stock market, and I am sharing some of those ideas in that channel. All right, so like I mentioned, the second stock is Nintendo, and obviously this couldn't be a Jose stock without a gaming stock. So Nintendo, many might know, is the creator of Nintendo Switch, big names like Mario, Animal Crossing, and the games right, Super Smash Brothers, Super Mario Brothers. And one thing I want to say about Nintendo is, even though with these new generations coming out, Nintendo Switch is still selling crazy levels. And most other games barely go on sale because they are grabbing so much attention. So I think that's actually pretty impressive. All right, so Nintendo right now, current stock price is about $65.82. Here in the United States, this ticker is NTDOY. I know in different regions, it's different tickers. Year to date, it is up 30%. Right now, it is down about 10% from its all-time high. So there has been a decent pullback on this gaming stock, like most of the other gaming stocks right now. Market cap is sitting at $62 billion. First thing we're going to take a look at, is it overextended? Right now, based on the current stock price, we are seeing it is pretty close to its moving averages, so it's not overextended. The second thing, does it have volume within that region that it's at? And we can see, right, there is a strong resistance level around $62.70. Around that area, we see a lot of volume, and then after that, not much volume. So that tells me that is a huge resistance point. Obviously, we saw those levels before. I wish I would have taken note of that. That would have been a great time to buy in. But even right now, I'm liking the current stock price. Another thing we can see is around this gap of $62 and $72, we're seeing a huge amount of volume that tells us investors are definitely buying in around these levels. Now let's take a look at future growth. Nintendo is unfortunately expected to decrease its revenue by 3.4% on average annually for the next 3 to 5 years. To be honest, I can't picture this, right? Right now, with the overall mobile gaming, with the strong IP platform that Nintendo has, I just can't see how they're going to continue, how they're forecasted to decrease in the revenue. And I do believe this might be giving great buying opportunities. So keeping an eye out on this stock. Right now, Nintendo is positive on earnings and is positive cash flow from operations. Now, if we take a look at their balance sheet looks amazing. They have plenty of cash at hands and no debt whatsoever. So I'm really liking Nintendo. Unfortunately, I couldn't really pull out their price to sales ratio to take a look at historical numbers, but Nintendo, I'm really liking almost everything from their earnings, their positive cash flow, the overall market they're hitting. So the major risk I see with Nintendo right now is also that revenue growth. Analysts are expecting it not to be so strong, it's to actually decline. Again, this is not something I kind of foresee, but if these professionals are seeing that, it is something that I would put on my risk list. The third company we are going to take a look at is Teladoc, ticker TDOC. But before we do that, guys, you should see a link down there below for 7 Investing. Every month, they recommend 7 stocks for only $17 a month. If you use my link or promo code JOSE, J-O-S-E, you get $10 off your first month. May I say, yes, this is an affiliate program, but I use their services and would recommend them to anyone. So Teladoc right now, pretty much everybody knows what they do, is the ability to talk to a doctor, therapist, or medical expert anywhere you are by phone or other form of mobile technology, your computer, your tablet, and do it via video. So let's take a look at technicals. Right now, current price for Tdoc is $186. It is up 120% for the year, and it is down 25% from its all-time highs. Current market cap is $27 billion. I'm actually surprised that it is that low. So first thing we're gonna take a look at, is it overextended from its moving averages? No, it is not overextended. The second thing, is there plenty of volume within the current price? And we can see there is a huge volume within these levels. I want to say a huge support level is $168. That would be a great entry position in my opinion. And then a huge resistance will be up here in 223 levels. That's where we see most of the volume ending. And this tells me good support levels and good resistance level. Right now, Teladoc seems to be in a strong area based on the volume where investors are buying and selling. Next, let's take a look at future growth. Teladoc is expected to grow its revenue 32.9% on average annually for the next 3 to 5 years. Compared to the other two we saw, this is a super growth stock. Another thing we are seeing is they are expected to be positive in cash flow from operations within the next few quarters, and within the next 2 years they are expected to be profitable. So right now they are not profitable and they're barely making it to cash flow from operations positive. So we want to make sure they have a strong balance sheet. So in form of balance sheets, they have cash and short-term investments of about $1.2 billion and they have debt of about $1 million. So they have more cash than they do debt. I honestly would have wished to seen a little more cash there, but they are going to be positive in cash flow from operations really soon. And again, that allows them to really much pay off all that debt and be able to continue their everyday business. Now let's take a look at their price to sales ratio. Price to sales ratio right now is 16.57 compared to the highs, which were almost at the 20s. And we were seeing that in Q2 and early Q3 of this year. We saw in September of last year, it was actually almost close to 15. So price to sales ratio right now doesn't seem too overextended compared to historical highs. So that's a great thing there. The only thing I do want to say right now with Teladoc is obviously this is a great market to be, but I do see a lot of doctors going outside of Teladoc and just using simple services like WhatsApp or Zoom to communicate with their patients. So that's something to keep in mind of. But I do believe price to sales ratio right now is not overextended. Great revenue growth is another stock to definitely keep an eye out. And the final stock we are going to take a look at, and this is like I mentioned, somebody posted this on the YouTube comments and let me know, hey, so I decided maybe every episode I can do one stock that someone posted on the YouTube comments. So let me know on the YouTube on the comments below, what is the next one I should put in this list. So this one was Peak Position. And Peak Position is pretty much a fintech company in China. So they do more commercial lending in the industry. And right now it is a Canadian publicly traded company. The ticker there is PKK. But I do believe if one wants to buy it in the United States, it is PKKFF. So here's another site of them. A lot of information there, pretty much just a way for a lending to small and micro businesses. And that's usually a market that many big banks and big fintech places don't go into because small and micro businesses are usually the ones that have the higher rate of failure. So right now, Peak Fintech is one that is gonna be hitting that market. Now let's take a look at a few things. Current price right now is $1.32. Year to date, it is up 288%. It's currently at its all-time high and it has a market cap of $169 million. So this is a small cap company right now. One thing I am seeing is I do believe we have a nice amount of resistance here in about 89 cents and huge volume here at around $1.22. Again, this is, we can see in prior history just based on these on these candles that volume for this company, for this ticker, is not that high. So that's definitely a risk, I would say. Next, let's take, and the other thing is this is a super small cap company. Right now, the revenue is expected to grow 17.6% on average. That is a nice growth stock. This is what I would consider a growth stock. We're also seeing them expected to be profitable in 2020. 2021. Balance sheet right now, it's looking not that bad. They have about 4 million Canadian dollars in cash and short-term investments and about $5 million in debt. Let me take that back. I'm not a huge fan right now of that balance sheet. They have more debt than they do have cash, and right now they are not positive in earnings. If they were positive in earnings, that would have been something I would have been okay with. So right now, like I mentioned, this is one that was mentioned by someone in the YouTube comments. PKK, for me, normally when I invest internationally, I really want to invest in companies that are either backed up by some big company that I follow. For example, Tencent. If you're backed up by Tencent, you're a company I normally follow. But very, very small micro companies like this, and there's no real person or no real big business that backs them up, I usually stay away for those reasons. Other things I saw was obviously not profitable, and the balance sheet, even though it looks good in form of assets to liabilities, that cash compared to debt is not something I want to see. Obviously, we have strong revenue growth, and it is expected to be profitable soon. So I hope you guys enjoyed today's episode. Like always, let me know what you think. Make sure to hit that thumbs up. It helps so much with the YouTube algorithm. Take care. Have a good night.